Every time the Fed has to go back and amend a statement, say there's no inflation, it's transitory, inflation is good, 0.25 will take care of it, 0.50 will take care of it, 0.75 will take care of it. All you're literally doing is chopping down consumer confidence and making people extremely paranoid, because you can only be wrong so many times before, as a collective group, everybody's like, okay, they have no idea what the hell they're doing. Let me get my money out of here now before there isn't any. Welcome back, YouTube. So in today's video, we're going to go over some projections for tomorrow in the Fed meeting, what can ultimately happen here with these new rate hikes that they're going to do to try and get control of the inflation in the economy, and also go over some bottom numbers here, depending on which direction this takes. So first off, we had 5 consecutive days of pretty much a decline in the S&P 500. As you can see here, this is pretty much saying that the benchmark S&P 500 suffered its 5th straight daily decline, marking its longest losing streak since early January. Monday's decline put the index down more than 20% from its most recent record high, confirming a bear market began on January 3rd. The plan was, going forward, they were going to do the 50 basis point, 0.50. That's what they were going to do. Since we're still outpacing the inflation rate, that, or at least the aggressiveness of the Fed thus far, they're saying that, okay, well, it's time to amend the plan again. And this isn't nothing new. We've amended this plan several times. Even the plan was amended at least 5 times just to even get the Fed to acknowledge that there was some form of inflation. Remember, the inflation that we're seeing here, this is actually tracking behind inflation. So even when we get the new numbers here, like 8.6 and stuff like that, inflation, this is like a month old. The current numbers can even be higher. And this is one of the things I was talking about earlier this year, when I said that, a lot of what kind of year was going to be pretty much circled around the Fed and how they handled this situation. And that's why I was saying that 0.25 is not going to be aggressive enough. And this is one of the reasons people ask me, oh, what do you think Dogecoin is going to be by the end of the year? What do you think Bitcoin is going to be by the end of the year? Can't say. It was too soon. And it was great that I didn't do that, because the Fed has failed miserably, continuously this year. And if we don't get the proper aggression from them, inflation is going to get dramatically worse, and we're going to start to see some compounding effects, and we may actually see an aggressive rug pull on the market. Now, they could come out tomorrow, which I do believe the right thing to do, which is probably to go a full percent and not 0.75, but they've shown time and time again that they're not aggressive enough, and they're always seem to be like a step behind, or at least a couple steps behind. So I can say that, in my opinion, I think we should expect 0.75 at least, but I do believe that we're going to be that they should do something of like a percent, a full percent, or even higher. Would that rug pull the market? Yes, it would. It would shock the market, but the hole that we're digging is getting deeper and deeper. They could have done this several months ago, and we would have been in a position where we could be monitoring the economy to see signs of improvement. But because they're literally just beating around the bush and not being aggressive enough, we're seeing inflation we're seeing the monster actually get bigger and bigger, which is going to cause for something. The inflation that's going to take to tackle that mountain actually have to be bigger and bigger as well. We may end up like something in like the 70s, where you're going to have to set the inflation rate higher than the actual rate of inflation. What does that mean? That means basically you're forcing a recession here to slow down the money. And I don't care what you see on TV, what an influencer says, whatever. If you're forcing a recession by raising rates, it's not going to be a soft landing. It's going to hurt like hell. So a lot of you guys know that if you follow what I was talking about $20,000 Bitcoin, 6-cent Dogecoin, having those breakdowns basically just looking at the charts and stuff. And the question is, can we go lower if the Fed misses the mark again? 20,000 is actually an extremely important number for Bitcoin, and a great indicator for the entire market. We got down, I think, to like 20,600 or something. We got a little bounce, which is fine. We typically don't walk off of a cliff and just keep falling consecutively. You'll have people who will continuously, buy the dip or start being aggressive at certain points. And you may see some bounces. That is not an indicator that we're, recovering or going to the moon or anything like that. The market is not going to run until we get some solid answers for a lot of the macros that's going on. But if we look at this number here and we look at the previous cycles, if we fall below, I want to say like 19.5, we're going to break the trend of the higher highs every 4 years on Bitcoin. And that can potentially position the entire market to have another halving. If we break that, yeah, we have some support around like 14 or so, but then that can mean that we're actually going the full correction percentage for Bitcoin, which will, be around like that 9 to 12,000 range, which that's literally the full correction percentage. A lot of the other altcoins have already ran that full correction percentage already, just because of the amount of capital that Bitcoin has commanded this last bull run here. But it has not run the full range historically that it's been known to run. Typically, because, and I do believe that we have a lot more retailers in the market, and then you'll have certain indicators that will force people, not force people, but influence people to go into these positions here. And even when it's trying to correct, you'll keep getting these bounces, and it's not actually fully corrected yet. This comes into the fact that, I think it's really popular to say, like buy the dip, and the dip hasn't finished dipping quite yet. So you'll see these bounces here. But all the bounces we've got, whenever yesterday's video, they've been historically on point. We got the consolidation around like 29, 30,000, which was expected. We've gotten, over the last year or so, we've hit that mark around 13 times, and we got a bounce. So that's not uncommon. But if we break this cycle here of this 4-year trend, and we break below the 20,000 mark, I want to say 19.6, then yeah, we're in a position here for Bitcoin to actually correct the full percentage, which is, in some cases like 85%. And before people start making comments and on Twitter or below the video saying, oh, it's not going to correct that much, remember how we've already had this conversation when Bitcoin was at 60 and everybody was saying it was going to go to 100, and I said it was going to go to 20, and I even said 29 before. But we have to keep in mind here whose money this belongs to, whose money is in the market. I'm not saying I'm happy that the market is correcting, but I think it's important to pretty much show people exactly whose money is in the market. With a lot of the misconceptions in the market, people think that it's like retailers that control the market here, when we know that most of the money, like I'll just say most of the money is institutional money that's in the market. So when they want Bitcoin to go up, or when they decide it's going to be a pump, that's when it's going to be one. And people need to understand that and take advantage of these pockets of decline and stuff that we're in now. Because retailers, like if retailers are not going to have, we're below $1 trillion in evaluation right now. We peaked at 3.3 trillion. Retailers, even if they did another round of stimulus, retailers are not going to pump the crypto market back to 3.3 trillion. Retailers are not sucking out $200-300 billion in 24 hours and stuff like that out of the market. And when we come to terms with that, that will, I believe, as a community, it will force people to be more appreciative of these entries here, instead of being upset about them. So we have the numbers of Bitcoin that can put us in around like the 9 to 12 range. If we break below that support, that can be if they rug pull the market, if they drag this out, or if they miss the mark a few more times, that can certainly lead to that breakdown. Because what we're having here now is every time the Fed has to go back and amend a statement, say there's no inflation, it's transitory, inflation is good, 0.25 will take care of it, 0.50 will take care of it, 0.75 will take care of it. All you're literally doing is chopping down consumer confidence and making people extremely paranoid, because you can only be wrong so many times before, as a collective group, everybody's like, okay, they have no idea what the hell they're doing. Let me get my money out of here now before there isn't any. And that's only going to further the decline here in these markets. Provide great entries if you have the money, sure, but as far as for overall longevity and the panic that's in the market, it's going to absolutely contribute to it. So we have the numbers for Bitcoin. Let's take a look at Doge. Now, technically speaking, even with the floor and the numbers that we're at now, Dogecoin has consolidated that full window that I was speaking of with Bitcoin. Now, does that mean that we're at the absolute bottom and no more liquidity can flow out of Dogecoin? No, it does not. But it means that it'll be much harder to get the coin as far as to break down. I do believe that we are relatively close to the absolute bottom number that we're going to see in Dogecoin without like a prolonged recession or something like that. Around that 5 cent level, I do believe there's going to be strong support there. But if we were to get a further breakdown or liquidity pulled out of the market, I do believe that something like 3 cent would be on the table. But at that point, anything below really where we are right now, I do believe at that point, people are going to be, I believe at that point, it's just kind of like a no-brainer for most of the community, and even for people who are no longer in the community. I think that at that point, it's just going to be an easy pickup, because when you are getting in at these prices, you don't necessarily need to wait For the people that's short term, or even if they want to trade it, you don't necessarily need to wait until you get to $1 to making a substantial amount of money. So if you're buying at 3 cent, 2 cent, stuff like that, by the time it even gets to a dime, you 5x your money. So I believe that we're going to have massive, massive support at those levels there. Not saying we can't go lower, obviously, because the Fed has extremely disappointed us with missing the mark. I did a breakdown of how many times they've missed the mark with inflation yesterday. I think it was like 11 times consecutively. So I'm not saying they cannot fumble the ball again, but as of right now, that's where I stand with the numbers. But ultimately, we're going to have to evaluate what the Fed does tomorrow and get those concrete numbers that they're going to actually pull out to handle the inflation, and then kind of evaluate that and see how the markets respond. I do not believe that there's no positive news that can come out tomorrow to handle inflation that was significantly higher than what you thought it was going to be. To handle inflation that was a lot higher than what you thought it was going to be, I don't think there's any positive news that can come out of that tomorrow. But we're going to have to see how aggressive they're going to be on the front end so that we can properly assess the market and the market's reaction. So I hope this video finds you well. Like the video if you found any value. Subscribe to the channel if you want to hear more from me. It's free, and that is an absolutely free way to support the channel as well. I appreciate all of you. Thank you. And until next time.